Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Thursday, the 10th of August, Bull versus Bear webinar. Steve Miley here on the call for Trade Day. Welcome, everyone. So we're going to go for our usual regular run through in here today. Calendar, what we've had, what we've got coming up, macroeconomic, fundamental, central bank driven events that are impacting financial markets right here, right now. Any geopolitics as well that might be influencing. And then we'll take a quick look at the charts. I'll be really honest with you guys. I have literally just sat back down at my desk. I've been off the desk all morning. So usually I'm very well prepared for these webinars. Today I'm really the least prepared I could be. But equally, I have read all the news from this morning whilst I've been not at the desk. So I've been keeping up to date, but I just haven't got it all lined up for you like I usually do. So my apologies if I'm winging it a little bit, but it doesn't usually happen. So let's just go through in here. First of all, the calendar. So let's step back before we step forward. So yesterday we had a load of the oil data. The oil data actually having a little bit of impact on markets, but really, even though we've got to some extent in here the oil data was kind of slightly bearish for the market, but we've also got an impact in here from the oil data that we've got this ongoing tension of renewed or escalating tensions between Russia and Ukraine. The tanker that was hit by a drone, and then concerns there that could be put upside pressures on the price of oil. So despite this being actually negative for the market, you see a lot of this in red in here from the data we had yesterday. But on the actual macro side, we're getting nothing coming through. All we really had yesterday was a continuation. We had that Chinese data in the morning from overnight, and then a continuation really of concerns, I think. We're kind of shifted a little bit into risk off. Real concerns about the economy. So around yields, if we go and take a look at the charts in here, yields are kind of stabilized a little bit, but we have concerns about the economy potentially going into a recession in here, even though yields actually went slightly, well, just consolidated really yesterday and consolidating again in here today. But concerns about yields, potential higher yields, echoing concerns about the state of the US and the global economy. And then we are also seeing, to an extent, those concerns still from the Moody's downgrade of the US banks still filtering through. So all of that, and then technically we've been breaking down levels. So if you look at my daily update in here, we've been continuously taking out levels. 2 days ago we saw a sell-off and then a rebound. Then yesterday we sold off and was hitting new lows again in here yesterday. So markets remain on the negative. Resistance levels are remaining respected and support levels are getting broken in here. So we continue to stay on the back foot in here. But obviously, critically, we are now going into a massive piece of data. So switching into today, the CPI data. We've had hardly anything this morning, by the way, as well. You can see hardly anything there. So it's all going to be about CPI today. So that's another reason for this webinar to probably be fairly short. It's going to be a complete reaction to CPI. Now we are looking for this CPI data to continue to see signs of easing pressures from of inflation. So we're going to be really focused on that today. If we see kind of moderately lowering inflation, is probably going to be good for the market. If we see too big a drop in inflation here, it might be actually negative for the market, but we'll have to wait and see. But I think a drop in inflation generally going to be seen as a positive. It means that then the Fed could potentially start to actually cut rates rather than hike rates. So and keeping an eye on the bond market as well, and keeping an eye on this Fed Watch tool to see if this change. This has been really static recently. 85% for the next meeting. And this has been fairly static as well, of what we're expecting, like basically a 70% chance of rates being the same or lower by the end of the year in here, but pretty much nailed on to be unchanged by year end. And now we've got, if we look out to like March, where we're expecting the rate cut, looking for, what's this now? We're at 57, about 60% chance of a rate cut by the March meeting. Okay. So, those have pretty much been fairly static in here more recently. But all eyes are going to be on, so stocks rally, but I mean not a real massive rally. Travel restrictions, this is the main piece of kind of geopolitical news overnight in here. China easing travel restrictions in here, a positive in here certainly for the Asian markets, for the China market and the Asian markets in here, and European stocks in here. You can see that. So in here, I'll just open up some of these in here. So So winging it a little bit in here today. Stocks rallies, China eases travel restrictions. So that's seen as a definite positive for China and for Asia. And then also if we go back in here, we'll see that European luxury stocks in here, lifted by luxury as China eases travel curbs. So that's a positive, right? Luxury goods in here. Chinese travelers are buying luxury goods potentially. So helping European luxury goods in here this morning. And then this is a kind of quite interesting. I did have a look at this while I was off the desk this morning. A week of 1% moves of the S&P 500 could trigger false selling. So Nomura says volatility control funds highly exposed to stocks. US inflation will be like key test if volatility spikes. So looking for, it could just take a 1% move in the S&P 500 up or down every day for a week for the rally in US stocks to come as significant. So this is looking at the link between increased volatility and the actual level of the index in here. So I think that's quite interesting. See if you can access that one. I think that's one's worth a read. Fairly interesting read on that one. Going back to the main menu though, let's just run through 5 things you need to start your day. So in here, let's just actually look at this one as well. Looking into the consumer price data set to show wave of disinflation. This is not deflation. Remember, we looked at China. Deflation is falling prices. Disinflation is falling inflation, so less inflation. Okay, so it's not falling prices, it's inflation moving in the opposite direction, so less inflation as opposed to falling prices. It's not accelerating or less acceleration in prices. Okay, so that's what we are looking for to come through. Let's take a look at 5 things to start your day in here. Don't think we're going to get too much from here. So CPI day, we know that anyway. Further restrictions on investments in China coming out the Biden administration. Nothing new in here. Shares in Walt Disney on the rise in pre-market. Group said losses in Disney Plus streaming narrowed, and it points to lower spending. So we did point out Disney coming after the bell there. So some positives from Disney. And having been very negative more recently, futures are on the up in here this morning. Quick look at Reuters as well. ECB on the back foot for once it's down to Germany. I'm not sure what quite that is. You've been something on the back foot again, and this time the bad news doesn't come from Greece. It's the usual suspect in the block. Okay, I don't know what one's about. I haven't really seen that in here. And then again, really the main focus in here out of Reuters, a sticky inflation situation. So watching for the inflation numbers. A run through of where we are on the overnight. So Hang Seng was actually a little change in here, but the Nikkei was up after that positive news out of China. In here, on the European side, we've seen a very small bounce in here on the FTSE, but a better bounce on the German. That's the FTSE, the UK, but the German DAX up 0.5%, and the French CAC nearly 1%. Probably being helped by LVMH. Remember, Louis Vuitton is in there. Louis Vuitton, LVMH pushing higher, likely on the back of that positive news out of China. Sensitive to its luxury good, sensitive to the Chinese market. And if we look at US stocks, so look, futures rising, run up to key inflation data. So if we could zoom in here, but down again yesterday, remember, making new lows on most of the indices, new multi-day lows or 1 week lows or 2 week lows in here. But if we look at stocks this morning, we've had healthy rebounds, about 0.5% back up across the board on the major exchanges. But it's all going to be about the CPI data. Now, please remember, I've put it all over the site. We sent an email. It's in 2 forums. It's in the heads up. Don't trade 2 minutes before or after the CPI data. No orders in the order book. Okay, we will be watching, and you will fail the evaluation challenge if you have working orders. Please don't do that. Okay. Let's have a quick look at the charts. Not logged in yet. Oops, wrong one in here. Not the sim environment. Let me log into live environment. 1 second. Oh, it's going to load it anyway. It doesn't really matter if I'm in the sim or the live environment, to be quite frank. I need to come out of this page. This is our back end coming out of this. So let me go here. And it will be a quick look going here, guys, because really not much to say in here. So look, we did break down in here. Let's go. So that's the 5-minute chart on the S&P. Let's go to the 30-minute. I want to go to the daily. So in here, we broke down. We did make a new low. We said that had that rebound, but it had to clear above. Remember, we were talking about this 13-day EMA yesterday. Look how it really caps nicely. I pointed out the upside levels we needed to clear above yesterday, right? We spoke about this. Let me get rid of these in here. We spoke yesterday about the market clearing above this resistance here, this peak here, and the 13-day EMA. Look, we failed down from there, but kind of just undercut the low and now trying to rebound. I think lines in the sand on the S&P going into today, the kind of two overnight peaks in here between 45.16 and 45.18. That's your first trigger point. And then you've got kind of this line that slopes across here as well off these recent peaks. I'm going to draw this properly. Okay, so this one in here, not so much this bigger downward sloping one, but you can draw that on as well. Might get kind of a confluence of lines here because this one's no good, as you can see. So we draw it down through here. Why did that not apply? Save as default, apply, save. That didn't work very well, did it? Let me get rid of that. Sorry, guys. So we might get a little confluence of lines, as I say, if we come down through here. So actually that works quite well. No, that didn't work at all well. 3 times. How's your luck today? Not good, Steve. For some reason, that's snapping to the wrong place. I'm not a happy puppy, chaps and ladies. No, I'm going to get rid of that one more time. Well, last chance. If I don't get it this time, I'm going to give up. No, it works. There you go. So we've got the confluence here, these like little peaks and this trend line just above. So that's to say 45, 15, 16 through 17. Then we've got the trend line coming in around 22. And then really this upper trend line and these peaks up here, 45, 36 to 42. Those are kind of the upside levels. I think if we cut down below here, it's all going to be on the data, 44.95 and then really the low, 44.78 on the downside. Similar tail with the NASDAQ, a bigger low yesterday, but it held above this low over here. So this is going to be really a bigger picture important low down here. That's 15.063 and a quarter. Yesterday's low, 15.146 and a half. We step in onto the intraday. And again in here, zooming across. In here, let me take off all the old stuff. In here. So you've got this kind of bigger line coming down from the whole recent correction. So this trend line, I will probably have this one on because it's kind of flirted with that. I think that's important. So look, basically back above that kind of overnight peak, 15.306 is going to be important. You could redraw that trend line off this higher here. So it's going to be a little higher. That's going to be about 15.340. So 306 and then 340 and then ultimately really 433 on the top side. But I think we could see some volatility today. I really do feel we'll see some significant volatility, particularly if it reverses back to the upside. If we see soft, cooler data for the inflation number, this could really explode back to the upside. And we could see a lot of this sell-off that we're seeing in the last week and a half here on the NASDAQ, or over 2 weeks actually. But we could see a big chunk of this. I wouldn't be surprised to see a big day today. If it breaks down below this bigger support, that it could be a big down day. I could easily see a 2% plus day on the NASDAQ and a 1% plus day on the S&P, 1 to 1.5% day on the S&P. So potentially S&P like rallying back up into this space here, like towards 45, 70, 80 kind of area. On the downside, it could easily be down here towards like 44.11. So you're looking for a largish move today potentially. Any questions from anyone? No, it's been fairly short, bit of whistle stop, but these big data days, there's really not much point. It's all focused going to be on CPI. I could have just said that at the beginning and that would have been it, but we've gone through everything for completeness. Any questions? Any thoughts? Please don't trade through CPI. 2 minutes before, 2 minutes after. No trading. No orders in the order book as well. No orders in the order book. Okay. All right, guys, I'm going to leave it there. I'm going to wish you all a great trading day. Take care. Stay safe. Hats, helmets and goggles on for the CPI data now in about 44 minutes. I wish you well through that, and we'll be back with you for another bull versus bear webinar tomorrow. Might not be myself, might be Richard, but we'll definitely be covering the webinar, seeing how CPI has treated us. Take care, guys.